welcome to Foxon Media Digital. My name's Amy, and today I'm joined by Daniela Barone Soares, who is CEO of Snowball Investment Management. So hi, Daniela, it's great to have you.
Hi, it's a pleasure to be here.
Thank you for joining me. Of course, you spoke at the Summit for Asset Management ESG London back in November, so we wanted to catch up with you on our channel and see what you've been doing at Snowball. So before we dive into impact investing and some of the specific fund projects that you're working on, could you tell us a little bit about yourself and about your firm?
Yeah, well, I'm CEO of Snowball. I have a 30-year career with a background in both investment and impact. So my earlier career was in private equity and growth capital. And then later I spent some time in philanthropy, and then both in the buy and the sell side of impact investing.
Fantastic.
And talking about Snowball, Snowball is an investment manager with a 6-year track record in optimizing for impact, risk, and competitive returns. So we offer investors a highly diversified investment vehicle that stewards capital for the long term. We are also a big corp, so we're focused on that. Our impact investments are selected and actively managed so that it creates that competitive return, but also measurable positive impact. And we invest across 6 themes: energy transition, resource efficiency, regenerative ecosystems, homes and communities, equity and inclusion, and health and well-being. And this diversification of the portfolio helps to reduce manager risk, sector risk, geography risk. And also, I would say that the composition of our portfolio, the impact asset classes are uncorrelated to traditional debt and equity markets, and also inflation linked. So providing sort of a real return over the cycle. And examples of that are things like forestry or emerging markets lending, sustainable aquaculture, just as a few examples of impact asset classes that are both uncorrelated, but also that some of them really inflation linked. Our assets also mitigate the risks of environmental degradation and social inequality, which are currently eroding, I think, the long-term value and profitability of most traditional portfolios. The impact that we seek is in lockstep with the returns. I'll give you an example. There is a company in our portfolio, which is the largest underlying holding in our private equity portfolio. It's called eFishery. And what they do is they have a digitally controlled smart feeder for fish and shrimp farmers. And this feeder, it just dispenses the right amounts of fish food, using sensors that measure the fish appetite by looking at how they move in the water and the vibration that a hungry fish has, as opposed to a fish that is not hungry. So this is a hugely consequential thing for farmers, because fish feeding can account for over half of a farm's overhead costs. So this company has scaled dramatically and continues to have a really exciting growth trajectory. The revenues trebled last year, and the company is now running an annual recurring revenue of almost 400 million euros, targeting revenues in excess of 1 billion this year. So this is a great example of the kinds of companies that are in our portfolio where impact and returns are growing in lockstep. And we expect this to be our sort of an impact unicorn this year.
Fantastic. Yeah, thank you for that introduction. It's really nice to see, what you're doing, the thematic focus that you have, and some of those outcomes, the innovation that's out there that's changing the world, essentially, as you say. So with that in mind, then, because I think you've set the scene really nicely, when we think about the definitions of impact investing, sustainable investing, ESG, a lot of these words get thrown about, and I know that they're mentioned in certain international disclosures as well. and different regions treat them differently. So how do you define impact? I know you've kind of given us an idea of what those outcomes are, but how would you sort of distinguish between those terms?
Yeah, I think a simple way to define sort of impact and ESG. So broadly, ESG is looking at the dimensions of environment, social, and governance purely from a financial perspective. What does it mean? So how those dimensions impact a company's future cash flows and therefore their individual value. So it does not look at the product or service that that company delivers. So you can have a fossil fuel company rated highly on ESG. So an impact investing fund or organization would look also at this ESG dimensions for assessing risk and the impact of future cash flows in addition to all the financial metrics. But from an impact perspective, impact goes further. So impact looks into investing in what it sees as sort of the companies of the future. So those that are solving for social and environmental issues, again, in lockstep with returns. So this means these are the companies that are going to not only generate returns, but better quality returns, as their products and services not only contribute to solutions and produce measurable impact, but also better mitigate for those systemic risks that I think are really under allocated for or under evaluated in current portfolios. So this is, ESG in a way is looking for the impact of the world in the company, and the impact is looking for the impact of the company in the world, and also how that generate returns. So I hope that gives a little flavor. And I would say that a proof of that difference was a year like 2022, when both bonds and equities went down and ESG funds went down as well. And a fund like Snowball, we outperformed traditional portfolios by a long way for three main reasons. One, we're truly diversified. And two, significant part of our portfolio is uncorrelated to traditional markets. And three, this part of returns that are inflation linked, producing real returns. So these are looking into things that are delivering despite the drivers that brought markets down.
No, that's fantastic. I'm very pleased for you. And like you say, it's good that they're not market linked in a way when we think about companies in the future that are shaping the future of innovation and the sustainable development of our world. Naturally, as you say, they're kind of removed from those market trends in a way. So it actually provides that stability. I know there's a lot of talk about whether ESG delivers alpha, but I think that's a big generalization. It depends whether you're looking at, like you say, ESG purely from a financial lens or if it truly is impact. So that said, when we think about the types of investors who invest in impact funds, especially your funds, what kind of investor profile do you typically work with? And have you noticed that there are different types of investors who will prioritize just that ESG label just to tick the box versus genuine impact?
Yeah, it's an interesting question. I think, for example, as a diversifier, I think more and more investors are looking for impact, even if they don't, to be honest, even if they don't care about the impact itself. As a portfolio diversifier, this is becoming more and more a part of a portfolio, let's say. I think from our perspective, the traditional types of investors for the current fund that we were talking about is the high net worth individual or investor, family offices, endowments, medium-sized foundations and pension funds, as well as sort of some large foundations as well. For another product, in terms of our ability to do a managed account for sub-segments of our portfolio, being that for a particular asset class or a theme, for other institutional investors as well, we're beginning to see that interest. And that's another type of investor that we aim to have. But at the moment, the traditional investor that is looking to allocate for this is the sort of, for our fund, endowments, medium-sized pension funds, family offices, high net worth individuals.
That makes sense. I can imagine, especially on the private wealth side, people who want to do good in the world, impact will be a motivating factor for them. Especially, I know you said some, like you say,
Definitely.
some people are seeing the benefits anyway, even if they don't care that much. But it does. I can imagine why that's the case, especially when you compare asset managers just dealing with ESG, and it's very much metrics focused rather than just the rewarding personal aspect of it.
Yeah, and it's interesting. I mean, I think sort of there is a reward and personal aspect of it, but this is a better way to invest, genuinely. So even if you kind of because I think we can't confuse impact with philanthropy. There is a rewarding element of saying, gosh, I am making returns and my money is growing, but I'm not destroying the world that both me and my future generations are going to live in. And I'm not destroying the fabric of communities that live in this world, right? So that kind of course, you're going to feel much better about that. But I think it goes beyond that. I think it is really a better way to invest with the future priced in, and it's kind of looking at, I think sort of it's almost like there is a whole plethora of opportunities, but also a whole plethora of risks that are not at the moment so much present in current portfolios. And I do think is going to be transformative when people see that actually is a much better way to invest as a whole.
Yeah, it's definitely a complete strategy and approach. As you say, it's all of those factors coming together that give it those benefits. So that said then, because I know, again, when we talked about the definitions of impact and how companies define it, what would you say is the approach to avoid impact washing? Because we often talk about greenwashing, we generalize when it comes to ESG, but when we talk about impact of really, like you say, setting apart those benefits compared to perhaps traditional ESG products, how do you think firms can navigate that in their brand strategy, in their product labeling, in their actual investment strategy?
Yeah, it's interesting. I mean, I think I'll talk from a fund manager perspective, and I think it's quite transferable to brands as well. And it's sort of about transparency and accountability, but really, so for example, a lot of impact is created by active management. So in our case, sort of giving fund managers the tools to drive and to monitor impact in the underlying companies. And that requires sort of the know-how of what is important to deliver on the impact and what data to collect to monitor it. So and therefore that kind of, an understanding how is the impact created, what are the drivers of it, how we can measure and monitor it is key. And monitoring it across the investment process. So a lot of fund managers look at impact in their due diligence, and then they look back when they want to publish an impact report and report on it. What we do is integrate the impact throughout the investment process, which means that impact, of course, as well as financial, is informing every decision that we make around the portfolio and around our investment and around the managers. So and then what we did in terms of our own transparency and accountability is to have an independent verification of our impact process to see, are we walking our talk, right? And what we did, that as far as we know, we're the first asset manager to do this. We fully published this independent verification, words and all. It's on our website. So that everyone can see, and mainly investors can then be better equipped to differentiate the real impact from greenwashing, and to understand also where we can do better, where we need to improve, And we feel that this is a journey, but we want to be able to be really transparent and to be held accountable for it by our investors and prospective investors. What we also did in terms of accountability and transparency was to publish our methodology for assessing impact at the company level, as well as at the fund manager level. So you have those 3 reports there on the enterprise impact, on the fund manager impact, and then on our own impact verification of our own impact. They're all on our website. And we feel that this level of disclosure, of transparency, of accountability, even when things are not completely perfect, is the right way to equip investors to distinguish between what is real impact and what is sort of impact washing, what is just a nice marketing brochure versus what is actually people that are trying to deliver on this promise.
No, that's fantastic. It sounds good to have those initiatives. As you say, it really sets you apart. It really highlights the transparency, and I think it will improve investor education when they're actually thinking about what impact investing is. So I know that you have your own internal processes there, and you've done this impact verification as well, with third parties. But much like when we talk about green financial products, you have the green bond principles and all like that. But is there an impact investing specific framework that you've also used as guidance, or is that a bit still in the works from the regulatory side?
No, that's very interesting that you mentioned that. There is a framework that has been widely used, and I think is becoming the standard for impact, for understanding and measuring impact and querying about the impact. And it's the impact management project or process. I think they've renamed impact management process, IMP, which we have used and developed further to make it really practical for our portfolio and how we measure and monitor that impact. But that is a framework that I think is becoming widely adopted. And of course, we'll see, but we hope that the ISSB are going to provide sort of a reporting framework as to how we integrate impact and financial metrics in one sort of reporting framework in a way. So there is a framework that looks about measuring and thinking about impact, and that's the impact management process that I think is being more widely adopted. And then the ISSB is a reporting framework for that. We'll see what they're going to come up with, but hopefully that will be very helpful in terms of standardizing. And I think the more standardization there is, the more it will help investors to feel confident to allocate more and more of their portfolio towards impact alternatives.
Yeah, absolutely. It's about that balance, isn't it? Like you say, having a case-by-case basis to suit your portfolio when it comes to measuring impact performance, but also having that standardization so the industry feels confident to move forward and invest in that more, and so that investors have that transparency about how it is being measured across the firm. So I guess we'll just have to watch out for how those two guidances shape in the coming years. And yes, maybe by the time we have the conference at ESG London again in November, there will be some updates on that. Who knows?
Hopefully.
But yeah, for now, thanks so much, Jenny, for joining. It's always great hearing about your company, especially how innovative and involved you are on the impact side. So thanks for sharing the time.
It was a pleasure. Thank you so much, Amy.
And best of luck with the next steps in your projects.
Thank you.
Thanks everyone for watching. Don't forget to follow our YouTube channel for more content on challenges and opportunities in asset management, wealth management, and ESG. And don't forget to give this interview a thumbs up and hit the subscribe button.